Feroze Azeez, Joint CEO of Anand Rathi Wealth Limited, joins in now. Feroze, always a pleasure to welcome you on NDTV Profit. Of course, it's not the day-to-day movement anymore about the market, but the long-term vision that you have said is on the bullish trend. Looking at the last week when we spoke to this week, any new factors that have really emerged which changes the themes or the investment strategy?
I think between last week and this, what has changed to my mind is the fact that the FIIs have been topsy-turvy in terms of they'd given a good 15 days of positive inflows for the second half of June. That kind of consistent trend doesn't seem to have emerged in the last 1 week. They're more sellers than buyers. They have been more seller than buyer. That's one. Second, what's heartening or what is giving me some degree of comfort is the fact that markets are, from a FII short standpoint in the index futures, is 91% short. Whenever markets are so heavily short in the cash market, FIIs have sold, and in the futures market, if FIIs have sold, automatically there is hardly any more selling from the big boy, which is FII expected to come. And domestic guys got another 29,000 crores in June. Of course, 32,000 crores of SIP number, which was predicted. Of course, it's a writing on the wall, and the projection for the year end, financial year end, is 36,000 crores. So SIP numbers came in. FIIs who were almost trending changed. A good part is they're also net short 91% in index future. That's why I last time told you markets are going to be resilient. Bad news coming from Trump Sahab will not get us come back to 23,000 so easily. And even if it went there, of course, anything can happen. But staying there will be difficult.
Right. So there is enough support levels really coming in, Feroze. But looking at the earnings season so far, and IT is something that has been a spot of worry and actually very volatile. And most of the experts I have spoken to in the market have now stated that since IT is going through a lot of understanding and turbulence, it is more of a trading play than an investment strategy. What's your view?
I have exactly the opposite view. It's surely not a trading play. Why is it not a trading play? Because it derives its betas not from India. It derives its betas from NASDAQ. Of course, a trader might look at the Indian variable, and one result in the US of a company can move a stock by 24%. IBM fell about 20%, then rose again. The kind of volatility they throw up, you know what's the volatility of Dell stock, which has been there for decades? 112% is the standard deviation of that stock. So what I'm trying to tell you is Indian IT is not a trading play because it is deriving its volatility from the US IT. And US IT's volatility, if somebody put it on an Excel sheet, which most people don't do, but they have an opinion, unfortunately, you will be shocked. Dell is quoting at an implied vol of 112, January 5th options. That's what I'm trying to tell you. Would I trade a standard deviation of that kind unless I'm a long gamma player? I wouldn't. If I'm synthesizing derivatives options, then it's okay. But if I'm buying and selling underlying stock, no. When the volatilities are high, you have to just go long or short gamma, depending on what your opinion on the volatility realized and implied are. So that's one. Second is, I think it's still an investor's bet because 2-3 adversities for IT have come together. The AI thing is one part of it. I don't think AI has created that kind of damage alone. There are other 2-3 factors which are hardly spoken about, unfortunately. The other factor is IT top two, in Nifty, just about 6 months back, there were 2-3 companies in the IT space in the top 15. So when they share an index with MSCI Emerging Market Index, they're not just competing for capital from Indian domestic players. They're competing for capital largely from the $2 trillion, which follows this index, MSCI Emerging Market Index, where every country has a standard index by MSCI. We have 164 stocks representative in the emerging market index. 80.8 trillion of passive follows that index. 1 trillion of active follows that index. So IT has lost capital to not just because of the AI boom, but even to Korea, Taiwan, just because of index rejects. And I think that will turn favorable in the India story and India's favor, and that will give IT some degree of buoyancy. May not be in a few days, but in a few months or years or quarters for sure.
All right, so positive view coming in on the IT sector. And Feroze, then which are the sectors where you see the valuations at current levels looking mouth-watering for a long-term investment?
I would say banking is mouth-watering. Mouth-watering would be an understatement. Anytime a sector as large as 36% of Nifty, 36% of Nifty is banking and financial services. If that is quoting at 1.5, 2 sigma lower than PBs, it has quoted for the last 10 years. And last 10 years have not been astronomical valuations, right? Last 10 years, Nifty price index is 9.3% up. 9.3% compounded. Earnings have compounded at 12.9. So people might say valuations is a concern. I don't know where they come up with this. The largest weight of Nifty is quoting at 2 sigma lower than the mean and median valuations they've quoted. So banking definitely, if we speak of Viksit Bharat and if you attach 5% probability to those numbers, which are there in 2047, banking has to be a huge backbone for that to happen. And if banking can't provide that kind of support, then economy can't be where it is as envisaged to be. So I think banking, there's a lot of cleanup which has happened. After COVID, we were one of the smartest countries where we didn't distribute cash to people.
Sure.
We distributed extra loans. So I personally think banking is mouth-watering. Sorry for the longish kind of an answer.
No, Feroze. So yes, banking, and whenever the FIIs really return, the first stop for them also will be to dole in money in the banking investment. So thank you so much, Feroze. Always a pleasure speaking to you right here on NDTV Profit. Thank you.